I don't think subprime credit cards are predatory at all.
Subprime credit cards are credit cards issued to borrowers who don't qualify for prime credit. They typically come with higher interest rates and lower credit limits. These cards first emerged in the late 1970s and 1980s as banks began using credit scoring and risk-based pricing to offer unsecured credit to borrowers outside traditional lending standards.
Why subprime credit cards aren't as predatory as you think? Well, we're going to find out. I'm here with Patrick Brenner. Patrick, how are you doing?
I'm great. How are you, Philip?
I'm doing good. Now, you're a big advocate that subprime credit cards aren't as predatory as people think they are.
Sure.
And I'm going to give you the floor, and then we'll go back and forth from there.
I don't think subprime credit cards are predatory at all. I think that they generally exist because there are tens of millions of Americans out there that cannot qualify for traditional credit. And without these products, these subprime credit cards, many consumers would be locked out of the financial system, period. They're unable to build or rebuild credit at all. And I don't think it's really a debate about good versus evil. It's a debate about inclusivity and access versus exclusion.
Mm-hmm. Well, I mean, okay, great. And First Premier card.
First Premier introduced a notorious 79.9% APR subprime card around 2010.
79% APR. Okay, 79% APR. I can go down a litany of subprime cards or cards for people with poor credit scores. They have uber high annual fees before they even get to spend $1 on their credit card. They've eaten up a lot of their limits, sometimes 50, 75% on their fees. Like, that's a little predatory.
I don't think they're predatory at all. I think that these cards are specifically engineered for subprime and deep subprime borrowers who are generally understood as having higher default rates. I mean, in these portfolios, speaking from the lender's perspective, these cards all get packaged together in portfolios. That's what they're called from a lender. So in these portfolios of subprime and deep subprime credit cards, the default rates are incredibly high. The default rates are like 10 to 25% annually. That is an incredible amount of debt that has to be written off by these lenders every year. The actual balances are low enough where it's not worth it to pursue the consumer in collections. So that $500 deep subprime credit card that defaulted, they're never going to get that money back. The lender, so they pool this risk. They pool the risk of all the risky borrowers into these portfolios where the borrower has shown previous delinquency, and the credit products are priced accordingly. They're higher priced because the borrowing demographic that they're being lent to are much higher risk.
So what about just lowering the credit limit? Like, as opposed to jamming the client with these 79% APR and a uber high, annual fee. Okay, great. Just lower the credit limit. Like, give them a chance. Like, don't let them. It feels like, they say give them enough rope to be able to hang themselves, right? That saying that we've all heard. What
Sure.
about like holding back the rope a little bit so they're not able to default? Like, you start with $100 credit limit.
Well, a lot of these deep subprime credit cards already have really low limits. I mean, relatively speaking, they're not like $10,000 limit credit cards that the mainstream population has access to. But in these deep subprime categories, you're only seeing like 3-figure credit limits.
Right. But I'm just saying, take the 3-figure from 700 to 100. Then
There are some deep
risk.
subprime. There are some deep subprime credit cards that have limits that low.
That's the thing. I mean, I know you're not a big advocate of government intervention, but maybe there should be in this example to bring these people from deep subprime up to subprime, up to the other type of tiers. Maybe there should be like a limit on the credit limit for these very, very specific clients, where we're not increasing the risk for the bank, but we're limiting the risk. Sort of like what we did with the mortgage industry. Mortgage industry in 2008, be pre-2008. Okay, a non-qualifier income, 90% negative amortizing loan, up to $3 million, right? You don't have to prove your income. You can get a negative amortizing loan, meaning your balance goes up, and you don't see those anymore. maybe there's a way for the government to come in for these deep subprime to limit the risk that the bank's allowed to take to bring more of these people into the credit worthiness.
These subprime cards are already highly specialized. They're specifically engineered for the consumers that have deep subprime credit scores, and they're designed to help consumers graduate. And there's a cost for that. When I say graduate, I mean a deep subprime borrower, FICO below 600. That borrower has obviously encountered unfortunate financial circumstance, whether it's divorce, whether it's a bankruptcy. There's a reason that their FICO score is so low. In order to be able to retrieve them from the depths of that deep subprime FICO score, a bank has to be able to charge accordingly for that service. I mean, the service is, we'll report your good payment history to the credit bureaus. That good payment history, that credit utilization, all of the typical stuff that comes with any credit card, that is offered with a deep subprime card. And those deep subprime cards, because they're being extended to the deep subprime borrowing demographic, is just a lot higher risk. The chances of default are so much higher. The bank needs to accommodate for that. The lender needs to accommodate for that on the understanding that they're going to lose 25% of their portfolio year over year. It's just incredibly high risk. And there needs to be a price according.
But losing 25% of a portfolio where the average credit limit is 800 versus 100 would change the risk. And I mean, we've had hundreds of thousands of students through our program. And I can tell you definitively, people don't relate to any credit card as something I'm only going to have to rebuild, right? They relate to this like this is my future with this credit card. And even when people get secured credit cards, so they put $500 in the bank, this is their credit limit for $500. They have great payment histories. There are some credit cards that don't give that $500 back, right? And it's their prerogative. Don't get me wrong. I mean, it's the bank's prerogative to do it. It's the consumer's prerogative to look for better options. But my point is like, 79% APR is outrageous. I mean, it's predatory. And I'm just throwing
my
out
first auto loan was predatory, if we're going to call it that. Sure, the rate was super high, but when I got my first auto loan, I'm sure that would have sent the consumer advocates balking. It was at a time when I had limited established credit history. I was perceived by the banks as inherently risky because I had no credit history. It was a blank slate. I mean, no credit is just as bad credit.
Yeah,
in some circumstances.
Absolutely.
And the rate on that first auto loan that I got for a used car from CarMax, it was pretty high. I mean, I certainly wouldn't do that today. But at this point, I've established myself as a decent paying consumer. The credit that has been extended to me always gets paid. And I built my credit score and my credit history as a result. And therefore, having established that good history, I get access to some of the prime credit products. There was a price that had to be paid, and that price was in my first auto loan.
Fair enough. We'll let the viewers decide in the comments what's predatory, what's not. Patrick, thanks for being on. And I think what we both agree with, these credit cards are a means to an end, right?
Yes.
This is not something that people are going to have forever, but they need to understand that. So
there's a purpose to a deep subprime credit card. There really is. It is not intended to be a credit product that you hold on to for the rest of your life. You snag one of these subprime cards and you use it to rebuild your credit score, and then you graduate to, some of the other prime products that are available to you.
Great. Thank you, Patrick. Thanks for your time.
You bet.
You've been watching the 720 Credit Score YouTube channel. If you want to rebuild your credit the right way, visit 720creditscore.com. Please like this video and subscribe for more great content.